Hello and welcome back to Investing for Generations, your channel for high quality stock research for long-term value investor. And with that, first of all, I want to wish all of you a happy new year 2021, and I hope all your wishes will come true. And of course, you will follow me here on my road of long-term value investing. And remember, I will give you a weekly update on my real money portfolio. And so if you like this and if you want to join me on this road and want to see how this goes on, just subscribe to the channel and then we will see at least 1 or 2 times a week with analysis and, as I said, the weekly insight of my real money portfolio with all the transactions I do. And of course, when the new year starts, also you look back to the last year, and so I want to make today a short recap of 2020. And I have to say, 2020 was at least in the view on the stock market as an investor, the best year I ever had. And next to that, I also started this YouTube channel. This was also amazing for me and very exciting and still is. And I'm even more excited because right now over 630 people follow me, and this is even way more than I ever thought. Because I'm just a random German guy who speaks here about the stock market and his investments in a very poor English. And so I'm happy for all of you who follow me, and hopefully the one or the other will just join me on this road. I try to be as transparent as possible so that all my moves you can just follow even in 2021. But today I want to talk about 2020. This year was really, really good for me. I had a performance in 2020 of over 36%, which is an outperformance to the S&P 500 of over 20%, and that's amazing. That's really great for me, especially because I invest basically in very boring big businesses, not in the big hyped EV stocks, for example, or marijuana stocks or whatever is on the hype. This is not my thing, and so here on this channel you just find very, very fundamental investing in great and good businesses. And so this is what you can expect from this channel. And in 2020, this strategy really helped me to have a great performance in my North American portfolio. And I will show you a little bit what happened here over the last 12 months. My biggest winner was Disney. Despite all the corona problems and closing of the parks and so on, Disney is the biggest winner in my portfolio because I was able, in the depth of the pandemic situation in April, to buy into Disney for a little bit over 100 US dollar. You can see here my buy price back then was $101.07, and since then it's almost just going up. And so right now I'm almost up 80% with my position, and the only mistake I made at this point was I should buy way more of this great company. And of course, with now also Disney Plus is streaming, and the subscriber numbers for Disney Plus are amazing. It seems like Disney will have a bright future, and hopefully somewhere soon in 2021 also the world will come back to normal, maybe new normal, whatever. But then also the parks will open again, and then the whole Disney company will be even better than ever before. And so I'm happy, I'm very happy with this position and this performance. And I made some videos about Disney where I looked into the whole business model, the management, the financial numbers, and then calculated an intrinsic value. And then I also explained in my first video about Disney when and why I bought. And so you find all of that on my channel, and then following also videos about the quarterly earnings. So feel free to check this out. As I said, I think it's a great company right now. Of course, well, it's very high priced, and so I will not add to this position at this moment, but I will hold it because I think there's really a bright future. But of course, where's a winner, there's also a loser, and the biggest loser I had in my portfolio in 2020 was Wells Fargo. Um, I bought Wells Fargo. You can see this here on the green dots. Hopefully you can see that. I bought Wells Fargo also in the crash on his way down. Right now, my average buy price is $31.74. And so I'm down almost 3%, which is not a lot, but is the only position in my portfolio right now which is in the minus. And so it's the biggest loser. And as all of the banks, of course, they have big problems. We will see how this will turn out. You see a little bit later when we look at my whole portfolio. I have some of the banks in my portfolio because I think on the long term this should be good investments, good basic investments. Wells Fargo is a little bit different. I also have JP Morgan and the Bank of Nova Scotia in my portfolio, and these are really solid investments. With Wells Fargo it's a little bit different. Wells Fargo have very big problems, and I hope they can turn around. The last few weeks it looked a little bit better even in the stock price. We will see how this will work out, but there's a lot of uncertainty with Wells Fargo in the market, and I will not add to my position right now. I will just hold it and hope for the best. And also for Wells Fargo, you find some videos on my channel where I also analyzes the whole business and also the problems, and then go through the financial numbers, also explain why Wells Fargo is a little bit more risky than other stocks in the banking sector, like JP Morgan, for example. Calculate the intrinsic value and explained when and why I bought. And then, of course, in 2020, I also received some dividends. And since I started this North American portfolio at the end of 2019, so not so much dividends came in because it needed a little bit of time to build up this portfolio. But overall in 2020, I received 1,041 US dollar as dividends. And when we look from month to month, you see this builds up over time. And so hopefully in 2021, also the compound effect starts to kick in. Of course, slowly, as always, but most of my companies I really want to hold for the long term. And of course, everything depends on the price. And of course, if the price rises way over the intrinsic value at some point, I also have to sell. But normally, I buy my companies with the expectation never to sell again. If this happen or not, of course, um, depends on the stock price. And of course, if the price is way over the intrinsic value, you have to sell at some point. I also want to give you an overview of all the positions in my portfolio. As I said, Walt Disney is the best performer right now with almost 80%. But you see also Caterpillar, Legend Plaid, Facebook, and so on really performed very well. And so I'm very happy with this performance overall. And you find analysis of all these businesses on my channel, as I said, with deeper analysis, with a deep look into the business model, the management, the financial numbers, and the calculation of the intrinsic value. So check this out. I think you will find some value there if you want to be a long-term value investor, and if you're interested in finding the intrinsic value of a business. And here's also a pie of my portfolio. You see the Bank of Nova Scotia is the biggest holding right now with 7% over here, and then Intel, Berkshire, and so on. And overall, I have still 20 positions in my portfolio. This is still a lot. I mentioned this quite some time in my other videos. I think it's too much. But on the other hand, if I look every single position, I'm very happy with these companies. There is no need to sell some of them. And so I will just stick with that, and we'll see how this will work out. And then, of course, I also want to give you an outlook of 2021. what's up and what's my plan, what's my goal. It's very simple. I just have to stick with the plan. And the best quote I found to this idea is just when Jeff Bezos and Warren Buffett talk to each other. And the question is, Warren, your investing strategy is so simple. Why doesn't everyone just copy you? And Warren Buffett answered, because nobody wants to get rich slow. I have no problem to get rich slow, whatever means to be rich. I just try to build a little bit of wealth for myself, just to get more freedom, financial freedom. For example, just to maybe work a little bit less, just part time, or even at some point, if it really will, just to have the possibility to retire maybe some years earlier than normal. Who knows? But that's a plan. Just follow the road, follow the plan, and then hopefully have a nice performance over time. This year, or the last year, I have to say, with a 40%, it's very, very good. You can't expect to have a year like this every year. And so it's not so much about the performance, it's more to have great businesses that work for you, and over time, you will get a nice return. And so I just have to follow the rules, and this is just to find good and great businesses, calculate the intrinsic value, be patient, buy just way under the intrinsic value to have a margin of safety, and then again be patient because the stock price will come back to the intrinsic value sooner or later. At least if there is no big change in the company, in the business. The first point, of course, is the most important, just to find good and great businesses, and then be patient and buy to the right price. That's it. That's all. That's very simple. But I really like it simple, and I like the KISS principle. Just keep it simple, stupid. Because as I said, I'm just a very random guy. I'm not a great financial genius like Warren Buffett. I would say I'm very, very average. And so I have to keep it simple. And this is what I try. This is what I try here. This is also the reason I don't jump on every hype. I just invest in very profitable businesses with high certainty. That's the way for me. And if you think that's a good way, and if you are interested to follow me on this road, just subscribe to the channel and we will see how this will work out. And to make this possible, intrinsic value is key. For my positions in my portfolio, I made an Excel sheet where I have the current price, the buy price, the intrinsic value, and then also the distance to the intrinsic value. And so I have an overview which businesses are under the intrinsic value, or even like Caterpillar or MasterCard, even way over the intrinsic value. And so I can make my decisions to add to my positions, or if it's way over the intrinsic value, maybe sometimes also sell the position. This is the way I do it. And on the other side, I have a watch list of some companies. For most of them, you also find deeper analysis on my channel. Check also this out. And here is just the same. I will also build an Excel sheet for that. All of them are great businesses. The problem is just they are too expensive right now. And so we have to be patient and see if we get a chance to buy into these great companies at some point. When I look at this watch list right now, Alibaba, after the big drop last week, is the most interesting for me. And I follow quite closely because, as I mentioned in my Alibaba video last week, I would like to take a position despite all the risk with the China politics, when Alibaba uh, come down under the $200 mark. We will see if this ever happen. Uh, who knows? But this is my goal. This is what I keep in mind, and so it's the same with all of the other businesses. Just have to be patient, find the right point to buy in to have a good risk and reward scenario. And so I will go on and analyze more businesses over time, and then maybe my watch list gets even bigger. Um, And of course, I will show you all of that here on the channel. So that's it for today. Last but not least, I want to give you a big thank you. I started this channel just for education reasons for my daughter, just to show her how to invest maybe somewhere in the future, or at least that she can understand when she's big enough, old enough, understand how I build at least a little bit of wealth for her, and maybe she can follow this road and just can learn. But now with over 600 subscribers, I'm just surprised, excited, very happy that so many people follow me on my road to financial freedom. And so I hope if you're new to my channel and this is the first video you saw, check out all of these videos and just subscribe to my channel and ring the notification bell to never miss another video. And then also hit the like button because this helps the YouTube algorithm a lot. So that's it for today. A big thank you and a happy new year again. And see you soon with another analysis of another stock. See you then. Take care. Bye bye.